If you guys are brand new to the channel, thanks for finding me. This is a video that I do each and every week, showing you what's on my radar for the week to come. We actually have a pretty busy week this week, so probably about 7 or so charts we're going to take a look at. So let's hop straight into things and start with the euro dollar. So euro dollar, just want to keep you guys updated. Bigger picture, my prediction is still the same as it was a few weeks ago, still the same as it was a month ago. I think we're going to go down to 96s. If you guys remember from our previous video, I was looking for a move back up into our previous level of structure support, which should now act as resistance for an opportunity to get short. These green and red boxes, by the way, are called our VS1 levels. If you want to check it out, we're actually giving them away free this week with our Bridging the Gap workshop. So if you haven't signed up for that already, it starts August 1st, runs through the 12th. It's a 2-week free online trading workshop where you get access to these tools. You can play around with them for a little bit and learn how to work them and see if they benefit your trading. But I'm looking for price action to come up to this level, and we've kind of stalled here on the euro dollar. And what we may get is something called a complex pullback, right? So we know the market moves in kind of like an ebby and flowy type action, right? It goes down, it goes up. We have extensions, retracements, all of this fun stuff. Well, sometimes those retracements and sometimes those extensions aren't straight lines, and the majority of the time they aren't. Sometimes they come in multiple waves, and we call those complex pullbacks. And that's what we may be setting up here, right? If we just take a look at this right quick and we put in an equal measured move, we would have an AB equals CD pattern that comes right to this level right here, right? This is within our VS1 zone. This is a nice rejection level. You can see the 2 wicks of candles right here. This is also the consolidative level between or before this elephant candle. This is the big red candle you can see in front of you. So if we do kind of break out from this level, I would expect to move up to here or maybe right below about 104s, and an opportunity to look for that continuation short back down to parity at $1, and then again even further down to 96s, which was what our ultimate level which is what our ultimate level was. Next, we're going to head over to pound yen. I'm here on the daily of pound yen. Pound yen gave us a very nice week last week for advanced pattern formation rolling over, which was pretty good. And now we're coming back into another rejection zone, right? Pound yen has been in consolidation. We've essentially been putting in this wedge pattern. You can look at this as a pennant as well, because we do have this bullish extension prior to it, but you can see that we ran into our previous VS1 level, our level of structure looking left. We did not break and close above it, and therefore I don't have any, or I'm not allowed to make any longer term bias that we're likely to go to the upside. So I think a cool play here would be seeing if you can look for a little structure, counter trend based trade at this rejection level. And you can see the wicks in the past, right? When you see long wicks like this on your chart, this means pressure from the opposite party, right? So we'll take this green candle as an example, right? The bears pushed this candle down, obviously, because the extreme of price was right down here at 160.05. However, the close was all the way up here at about 163.11. This means that despite the bears pushing it down initially, they found buying pressure. They found bulls down there that was able to push it back up. And again, if you don't understand this stuff, we're going to teach it to you in next week's trading event, or the trading event over the next 2 weeks, so make sure you attend. But you can see the same thing here. So as we come to this lower trend line, and forgive my trend line, it's not drawn on perfectly. I don't really care for trend lines or whatnot. This is more of a visual so you guys can see what I'm talking about. But as we come down to this lower trend line, and more importantly this zone right here, if you're a counter trend trader, right, go down to a lower time frame, look for a sign of rejection, and look for a chance to play this right back across the range. Now again, if your overall analysis does allow you to project that we're likely to continue higher, this can also be a setup for a trade where you can look for a continuation higher. Again, for me, I don't see that, so I'll be kind of one in, one out quick with it, but you can always do that as well. Next, we're going to head over to the dollar yen. Dollar yen is a pair that my business partner, my good buddy Jason Greystone, did some nice analysis of a week or two ago, looking for shorts, higher time frame. I think he was looking at the monthly levels. I still have a bullish projection here on the dollar yen, and I see that we're getting some relief. Real quick, just to answer any questions, because some of this did come through over the weekend. Why are we seeing yen strength? Well, understand that yen strength is directly related to dollar weakness. You can think of these as kind of the two quote unquote safe haven pairs, the big boys in the market. Like, so when in doubt, when the world is burning, which it is, go to the dollar or to the yen, with the dollar being typically the favorite. When there is negative news for the dollar, which is kind of what we've seen, kind of more dovish news for the dollar coming out, well, people are now shifting from the dollar back to the yen. So it kind of does this dance vice versa. And then there are other pairs that, you know, take the place when both of these major currencies are kind of in hot water. But that's why we're seeing a lot of strength with the yen. Before, it was very negative as the dollar had very aggressive rate hikes and the yen was kind of holding steady. Now the dollar is coming kind of back to earth and we're seeing more interest in the yen again. So that's the reason for this entry, or for this movement. Bigger picture, we're coming down to an interesting level, right? So if you're looking for longer term buys here, right? We had our rising channel, our loss of momentum. We're starting to put in a little bit of a retracement. Check out this ICE zone right here. You can see this was a previous level of structure resistance, resistance, resistance. Once we broke above that resistance level, right, we came back, we tested it as support, right? So 132s, not 132 exactly, but starting at 132s and kind of going all the way down to maybe 130.50s is going to be a decent zone to look for a potential reversal and either a continuation back up to retest the highs or continue further. And again, bigger picture, I do think we have a lot higher to go here on the dollar yen. So a nice pullback trade could be happening there. I didn't look at this earlier, but it looks like a 50% retracement as well. Let me just bring my Fibonacci retracement out, swing low to swing high. Oh, even better, a 618, the golden mean. So we had a nice 618 Fibonacci retracement there as well, giving us some confluence when it's time to build the case. We can look at the RSI diving below 20, which is my oversold mark. Traditionally or defaultly, the RSI oversold is 30. I like to have mines at extremes, so I look for extreme overbought and oversold conditions. So we're building a nice CTS case. The CTS system is the combined technical scoring system. Basically, we assign a point score to the different technical tools that we use, and then we quantify that to find good, medium, and bad trading opportunities. So in this one already, you've got previous structure, you've got higher time frame confirmation because of the longer term trend, you've got Fibonacci confluence, you've got RSI overbought. You've got 4 checked off that list already. No doubt as we get to that level, and if we do start to see some signs of rejection, we may be able to even add more to that point score. So keep an eye on that level, about 132s to 131s, I would say. And we'll see what happens throughout the week. Next up, dollar Canada. This was a trade, or is a trade, that has been on my radar for a while. It just hasn't done what I thought it was going to do. Dollar Canada, you can see some of my notes on here as well. I've been waiting for a violation of this level, this first gold line right here in my crosshairs are at, because there is absolutely nothing standing in the way after that of coming down to our VS1 level, right? We have a small minor level of structure here right below 127s, but bigger picture, 126 highs, a little bit above, not 126 highs, but 126 lows, 126.20s of that area. We can certainly retrace down to that level, or extend down to that level, I should say. And not only do we have a you're going to see a break and close below structure in the lower time frame, but not only are we starting to kind of break below this level right here, but you can look at the candles that we got, some pretty positive bearish candles, right? We had a strong bearish candle right there. We have another bearish candle right there, a third bearish candle right here. You can see with our last 2 bearish candles, right? We spoke earlier about rejection. This time you can see the bulls tried to fight past that level and they got rejected, with the bears being the clear winner as we close in the bottom third. So we're still going to need a technical break and close below on the daily, or at least I am. You will have one on the 240, I would believe, if we go down to here. Yep, you do have one on the 240 here, which is the 4-hour chart, but a nice opportunity to look for a move again down to 127s at a minimum. 126s kind of being that greater level that we can retrace to, or extend to, excuse me. Next up is Canada yen, right? We spoke about Canada, we spoke about the yen. Let's combine the two and look at the Canada yen, or the Canadian yen here. I'm on a daily chart once again. This is going to be similar to the pound dollar. This has changed a little bit. So if you can rewind time, this was a another wedge pattern, right? With the bullish extension making this a bullish pennant pattern. Now, again, we weren't in the clear necessarily here. I don't know if I have enough data to show you. You may have to see a weekly. Let me see if I can go to a weekly chart real quick. Here we go. Let's bring this bad boy down. You can see here on the weekly chart, we never really cleared previous structure, so we weren't expecting a continuation higher. And what we got here was a little bit of a false breakout. You can see that we broke out of our trend line. We did technically get a higher high, higher close here on the breakout. But again, keep in mind, structure looking left, we never violated that level. And now we've come back down to earth, right? We've passed the midpoint of our pattern right here, which is a good indicator that this pattern is going to fail or has failed. And now the question is, where can we go next? Well, what I'll be waiting for is very similar to Dollar Canada, right? We're currently coming down into a previous level of structure support. We're holding right here. For some of you guys, you may have an advanced pattern formation here as well. Not one for me on the lower time frames. It gets really kind of choppy around there. But if we take a look at, give me a second here. Let me get my cryptographer ready. Take a look at this right here. Activate. There we go. X to A to B, B to C, C to D. You can make the case for an advanced pattern formation right there on the daily. But if we violate this level, where are we likely to go to? Well, right back down to our lower level of structure right here around 102. So again, we have this nice little zone here on our chart where our current level of structure support is 103.50s. Our next level of structure support is going to be about 102s. We've got a nice 150 pip kind of room or area in which we can look for continuation trades to the downside. So again, we're watching this current VS1 level closely right here. This would be a good day trading opportunity as well. And then we're looking for any chance we can to get involved down to that 102 level. Lastly, we're going to follow up on the Dow Jones. This is something, again, we spoke about either last week or 2 weeks ago. We looked at a break here. The S&P is doing the same thing as you would kind of guess. But we broke out of this level right here. We had a little ascending triangle. It's a horrible drawing, but hopefully you guys get what I'm trying to draw here, right? Equal highs and higher lows right there. We did get a breakout from that. We consolidated for a little bit, and then we popped and came right to our structure level. So hats off to all you guys that took advantage of this trade. Really good projection. Now, if you remember, the second part of this was the advanced pattern formation, right? So if we look at this move, and I'll draw in the fibs later, but this swing high to swing low is going to be our X to A. In fact, let me use this over here. This swing high to swing low is going to be our X to A. Our move right up here was our A to B. Again, we came to a 50% retracement. That means we're on alert for a bat pattern. Our second retracement right here is going to be our B to C. And then our bat pattern completion is going to be right at our 886, which is, I'm going to draw it off imperfectly, but hopefully you guys get the point, right up here. So if we push a little bit higher, we're going to have a bearish bat pattern. Again, look left, structure leaves clues. It's coming right at a consolidation level. So a chance for you to either do that stop and reverse that we spoke about, meaning you're going from a buy here directly into a sell, or if you already took profits, then just an independent sell looking for a little bit of relief. And again, that's the key with advanced pattern formations. We're not looking for any type of big move to the downside, just a little bit of relief, perhaps back to structure right here around our 382 Fibonacci retracement. Get in, get out, unless you're doing for secondary targets, and then reload for the next opportunity. So hope you guys enjoy. Remember, Bridging the Gap workshop starts Monday, August 1st. Sign up. It is 100% free. Just go over to www.tier1trading.com to register. It is a blend of live sessions and pre-recorded sessions. So if you cannot make it live, that's okay. Everything is going to be recorded. Everything will be shared. You'll have access to kind of catch up on whatever you missed. If you can make it live, that's always going to be better because you're going to get a chance to interact with the coaches, ask questions, and really get involved in kind of understanding what you need to know and what questions you need answered. That's going to help you become a consistently profitable trader. So I'll see you guys Monday. Until then, plan your trade your plan, hit that like button on the way out, subscribe if you're new, and I'll see you next week, maybe, question mark. We'll see how burnt out I am from the workshop.